In the energy quadrant today, crude oil up over 2%, up 2 of the last 3 sessions now as the price moves higher away from that $51 level, getting above 53 today. It's a pretty strong move for crude, which has been pretty weak as of late. It doesn't seem to be based necessarily off of the buildup of U.S. troops. U.S. is talking about putting another 1,000 troops into that Gulf of Oman, Persian Gulf, Strait of Hormuz area, again on the heels of Iran saying they're going to start exceeding their uranium enrichment levels. But today's move seems to be both on the potential for increased demand. We've been falling on the potential for slowing demand. But President Trump tweeted this morning that he had a good phone call with President Xi Jinping and that they would be meeting at the G20 summit next week and that the negotiators would start talking again prior to that summit. So that sparked demand. The potential for demand increase is at least what the market is thinking, and OPEC also getting involved as Saudi Arabia is expected to pressure OPEC members, according to the story in the Wall Street Journal, to again extend those production cuts that are due to expire at the end of June. So the president's tweet and the Wall Street Journal story about OPEC all looking at potentially stronger demand, potentially lower supply. And then in the API numbers that we get later today and the EIA tomorrow morning, the market is expecting large draws related to the summer driving season, which basically started on the holiday weekend a couple of weeks ago, and those draws would start to affect the supply of gasoline. We've seen it in refinery utilization numbers, which have been up basically 3 weeks in a row. So if they come up again in the EIA numbers tomorrow, that would also look to that increased demand, not only based on the potential for a U.S.-China trade deal, but just the summer driving season finally hitting those gasoline and crude oil stockpiles.